Okay, and we are already live on Facebook. All right, so for those of you, if you want, you can also follow us on Facebook as well. All right, so if you are watching it from Facebook, do help us to like and of course do help us to share so that more people can video with it as well. So we will be starting in about 30 seconds. In 30 seconds time, we will actually get started. And tonight we have about 82 of you here. All right, 82 of you, and that is a really great number. So thanks everyone for joining us this evening. All right, for this fundamental investing with the future, what I promise to do is to control my 100%, and of course to make it easy and for you guys to be able to understand the investment concept that I am sharing with you tonight. So if you guys are ready to get started, can you just type in start into the chat group? Start, S-T-A-R-T. Okay, and I am ready to start as well. I'm ready to start. So let me make sure that I can see my face. If you can see, let me see if I can see my PowerPoint. Okay, great. Yes, I can actually see my PowerPoint right now. So first of all, a very good evening to everyone. So welcome to today's Fundamental Investing 3.0. So as usual, in terms of this particular series, what we have started with is to start off with the very basic, okay, on the FA side. And of course, for Fundamental Investing 2.0, we touch on more on the valuation model. Right, so for today, what is going to be different compared to 1.0 and 2.0 is that today we are going to look at certain companies, all right, that doesn't really fulfill our criteria, okay, which of course previously we are talking about, we want companies that is making profit, having operating cash flow positive, etc. But we all know that there are a lot of companies right now that doesn't really fulfill the criteria, but yet the share price has been going over the roof. And I think end of the day, people will be asking, is that Bowen? So when it comes to investing in the stock market, what I want is to be able to make money. All right. So if this group of companies is able to make, the share price is able to go higher and higher, is there any way we can actually look at this group of companies? And that is exactly what we are going to touch on today, okay, on this 3.0. So I just want to touch on this boat, whereby we are going to use this boat very often. So I hope you guys remember this. So in terms of how we actually do our investing in Ultimate Investing is that we focus on three components. We have the fundamental analysis, we have the technical analysis, and of course we have the options, which works like the engine to help us to go even faster. Right. So before we go to the fundamental, which is actually the how of the boat itself, so let's play a very simple game. So how do we actually play this game? I need everybody to prepare your chat group as soon as fast as possible in front of you. Okay, what is going to happen is that, okay, this particular game is called Guess the Stock. So how does it work? Later on, I'm going to show you a picture, okay, and what you are going to do is you're going to guess the name of the stock that the picture represents. Okay, let's start off with the first one. Okay, so the first one is not going to be counted. It's going to be like a practice for all of you. So can you type in what is the company name that you can see from here? Yes, fantastic. Wow. Danny is really fast. BlackBerry. Okay, BlackBerry. Right, for those of you who are not sure, yeah, this is basically BlackBerry lah. Okay, so that is the company itself. So if you guys are ready, we are going to go into the game itself, and this time around it's not going to be a practice, so type in as fast as possible. All right, so in 3, 2, 1, go. All right, what's this company? Okay, wow, Patricia is really fast. Facebook. Yes, Ivan is really fast as well. Facebook, exactly. Somebody type Amazon. All right, yeah, that's not the correct answer. Correct answer is Facebook. And next, is, what is this company? 3M, yes, yes. Wow, I think it is really, really easy. This is pretty much like a giveaway. Yes, this is basically 3M, okay, the company that we are all familiar with. All right, you know, when it comes to your Scotch tape, when it comes to your sticky tape, your blue tack, etc., you know, this is the company 3M. So next company we have over here is, this is slightly more complicated, but I don't think this is going to be an issue for many of you. Anybody? All right, yes, Celine and Ilham, we got a correct answer. Patricia as well, really, really fast. Okay, Lululemon. So for the ladies, I'm sure you know, if you go to the yoga, if you go to the gym, this is basically a very premium yoga pants company. Okay, Lululemon, not lemonade. Okay, yeah, the correct answer is Lululemon. Okay, we have a few more coming up. What is this? What is this? Google? No, not the correct answer. It's not Google. Any better guess? Any better guess? Netflix? Nope, not the correct answer. What movie does this picture tells you? Matrix. Yes, you got a correct answer. I mean, you're close. So who is the main actor in Matrix? And probably from there you will be able to get the correct answer. Yes, congrats to Celine and James as well. Yes, so the company for this is Neo, N-I-O. All right. So why is it Neo? Because yeah, the main lead in Matrix is this guy called Neo, N-E-O. So Neo is the correct answer. All right, and this is the final one. This is the final one. All right, congratulations to Tony. Right, so the game has stopped. So this is, the company name is called GameStop. All right, and this is the last. Okay, this is, like I said, the game has really stopped. So congratulations for playing. Okay, so right now coming to GameStop, I just want to share with you guys, you know, what is exactly happening with this particular company. You know, this has created a lot of saga right now in the market, and of course, a lot of news are, you know, publishing it. So GameStop, basically, it is a retail store that sells game. And why is it so popular and why is everybody talking about GameStop? Is because if you look at the share price, okay, over the span of about 2 to 3 weeks, the share price from $20 went all the way to the moon, went to $480. All right, and recently it came all the way back down to $65. Can I just do a quick check? Okay, how many of you here are invested in GameStop? Can you just type in diamond? Just type in diamond if you are vested in GameStop. Anyone? When I say vested, means that you believe that it's going to go up. If you're shorting it, please don't tell me. Anyone invested in GameStop? Like I said, we're not going to judge you, but this is just for, yeah, my own personal interest. Nobody? Zero? Now I know why it went all the way back down. So a lot of people have been talking and say that, oh, you know, this company, you must buy this company. But so far, out of all the many friends that I've asked, nobody buy them. All right, so you know, there's a lot of hype, you know, surrounding GameStop, etc. So let me ask you, what is happening to GameStop? If you refer back to the boat example that I actually shared with you, remember, okay, what we have shared with you is that the how represents fundamental investing. That means looking at great companies, strong, solid, fundamental companies. And the sail represents the technical analysis. And of course, the engine represents option. So in this particular example of GameStop, if you look at the boat itself, it looks basically like this, whereby you have a very, very strong sail, and it is riding with the wind. Okay, so the wind is really strong and is bringing the boat to a very fast pace. But one thing you realize is that this particular company, in terms of the fundamental, it is not exactly the best in terms of the financial that we are looking out for. And that is why if you look at this particular boat, the how is really, really small. Okay, so let me ask you this particular question. Looking at this particular boat over here, do you think this boat is going to be stable? Yes or no? All right, and I think the answer is really obvious. The answer is definitely no. Can it go far in a short period of time? Probably yes, okay, because the sale is there. If there's a strong wind, it might be able to go for a certain distance. But the thing is, if let's say there is a strong wave, etc., this boat definitely will not be able to survive. And that is exactly what is happening. The game has already stopped for this particular company. So if we look at GameStop itself, looking at the numbers that we used to be looking at, which is the 4 criteria, earnings to be positive. If you look at GameStop, you can see that this company has been losing money over the past couple of years. Okay, basically from the left to the right, the right is basically the last few years. So on the right, you can see that it has been negative in terms of the earnings per share. If you look at the cash flow itself, I would say that it looks okay. Of course, there is a year which is negative 415, but other than that, overall, it is still positive. So I just want to be a little bit generous to it. I just give it a pass. But if you look at the ROE, return on equity, once again, it is negative 57.9. That is definitely a fail. And if you look at the debt to equity, we are looking at 0.5. This company has got a debt to equity of 2.02. So once again, if you look at the fundamental of this particular company, not exactly the best company that we want to invest in. So again, like I said, this particular company is just riding on the hype. If you manage to ride it with the wave and you get out in time, yes, you can make money. But the thing is, if you're looking for long-term consistency to be able to make money consistently from the stock market, it's good to avoid this kind of company. So that is the learning lesson that we have over here. And today we are going to explore companies that actually look like this. Okay, so what is the difference between this and our usual boat? Okay, this particular boat, you realize that the hull looks really, really shallow. Okay, which means that from the surface, we can only see that the hull is really, really small. Okay, but what is underneath the water is something that we are not able to see from the direct eye. But of course, there are many ways for us to know how deep this particular hull is going to be. But the problem is you got to do a little bit of homework. You got to do a little bit of deep diving. You have to dive in before you will be able to see whether this particular yacht, is it a solid hull or is it basically just a very, very shallow one, right? So that is exactly what we are going to do today. So now a lot of people is asking, is this another trick question? Okay, this is not a trick question. So basically for today, we are going to explore companies that appears to be weak in fundamental. All right, because they are, most of the time, they are losing money at the current moment. Okay, but in reality, they could be really, really strong. Like I said, you do not know what is underneath the water until you actually deep dive and jump in and look at, how solid the hull is going to be. So I'm going to give you, scenario number 1 on what are some of the companies that belong to this particular category. So we have 6 companies over here: Tesla, Fastly, Palantir, Alteryx, Pinterest, and of course, CrowdStrike. So one of the common interests of all these companies is that some of them are still losing money in terms of net profit. That means overall they are not profitable. Some of them have already turned profitable, but pretty much, they started off negative. So not exactly the best kind of earnings that we are looking out for. So one thing you realize for this kind of new company, right, okay, is that they are all relatively new company. So if you're a new company, and what is the main goal of your company? Basically, if you look at this, there's actually 2 things that a lot of new companies focus on. Number 1 is growth. Number 2 is expansion. Okay, so both the growth and expansion, you realize that it's going to require a lot of what? A lot of capital. And that is exactly what is happening to all these companies. So even though, they might be, they might be selling more cars. For example, Tesla, they might be selling more cars. And on paper, you realize that they are actually still bleeding money because of the rate of expansion. They are actually investing a lot on the infrastructure, etc. So later on, we're going to touch on a few criteria that can actually help us to look at these kind of new companies, and we are able to determine whether are we able to invest in them or not. So it's going to be interesting. So let's go for our first discussion for tonight. Okay, and the discussion is going to be, how do we know if a company is growing? Okay, how do we know if a company is growing? So what I'm going to do is I'm going to do something different. I'm going to do a breakout room. And so what happened is that I'm going to split all of you into 3 different breakout room. Okay, 3 different breakout room. So what I want you guys to do later on when you are inside the breakout room is that I need, some of you to actually initiate a conversation. Okay, be either you on your camera or you can actually start typing inside the Zoom chat. All right, but I want you guys to actually start discussing. Okay, how do we know if the company is growing? I mean, what are some of the things that we can actually look at, and what are some of the numbers that we can actually determine? I'm going to give you about 5 minutes for this very, very simple exercise, and I will be jumping around the room. So make sure that you guys, when I jump in, you guys are discussing. So for those who are more extrovert, okay, please help to initiate the conversation. All right, so you should receive a request to join the room itself. So I need you guys to accept, and we will come back in 5 minutes time. Okay, we will come back in 5 minutes time. All right, welcome back. Welcome back. I think most of you should be already coming back here already. Let's wait for a while. Okay, is everybody back here? Let me just do a quick check. Okay, yeah, I think all of you are already back here. Breakout room. Okay, that's great. That's great. Everybody is back here already. So can I invite one person from room 1 to share with you what are some of the key findings that you guys actually have over there? Anyone? Any volunteer from room 1? Anyone? Anyone from room 1 or room 2 or room 3? You can just unmute. Let me see if you can unmute yourself. I know some of you are not able to unmute yourself. Okay, yes, you can unmute yourself right now. So can I have somebody from room 1 and somebody from room 2 and somebody from room 3? Fundamental, yes. Can I invite Fundamental to share your findings from room 1? Are you here? Or no? Or very shy? Okay, yeah, maybe I just share lah. Okay, I've been jumping around for the 3 room, and room 2 is very good. Room 2 has been somebody has been leading it, so I don't really have to say anything. But some common one that I see is, of course, this company has got revenue increase, sales increase. Somebody mentioned about operational manpower increase. Okay, that means the company is hiring more. And what else? People also mentioned that there's new product coming on from the company. And I think from room 3, okay, room 3 actually also mentioned about subscription-based increase. The user actually increased. This works in particularly for SaaS company. That means software as a service company, right? That means, for example, the number of people who is subscribed to Netflix, yeah, this subscriber increase. So yes, then the business is actually growing as well. All right. And what else? What else? What are some of the ways whereby you know that the company is growing? Can you just type it in as well? If you are too shy, is there anything that I miss out? Yes, sales increase. We have mentioned that. Any creative one that within your room that you all discuss. Acquisition, yes, if the company is constantly, merging, having acquisition, buying other people's company, that also shows you that the company is actually still growing. That's a nice one. And of course, capital expenditure, the company is spending money to build more infrastructure, to build more factories. That also shows that it is growing. New product, overall pivot to key industry, and this is a key player. Okay, a little bit chim, but strong management with long tenure with the company. Yeah, but strong management doesn't mean that the company is growing, right? I'm sure you know that in Singapore we have a lot of strong company, but is it growing? Not necessary because of the limitation. All right, but anyway, thanks for sharing, and I think I hope you guys have interesting discussion previously. So don't worry, later on we will have another round of discussion. So yeah, be a little bit more proactive the next round. So coming to this, I think a lot of you guys have actually mentioned about higher sales equal to more revenue. So a lot of us, when it comes to whether this company is growing or not, we straight away look at the sales and we straight away look at the revenue. Are they collecting more money or not? So I just want to bring you to something that is a little bit more different. Okay. Oops. Let me just unmute some of you first. Okay, so let's look at this particular lady over here, or rather this girl over here. So this girl is Joy. So Joy is actually selling cookies, CNY cookies, okay, to make money. So based on her last year's sales in 2020, okay, she actually sold 500 bottles of CNY cookies. Each bottle sold at $10. And the cost of production for each bottle is $3. So Joy actually hired 2 friends to help her for 1 month and paid them $1,500 each. So can you let me know what is the net profit for Joy? Anyone? What is the net profit for Joy? Can you just type in the answer? Okay, wow, some of you are really, really fast. Yes, $500. Okay, $500. So that's the correct answer. Yep, so this is Joy. So Joy, after doing everything, you know, after paying the friend 1,500, another friend 1,500, and then she realized that, wow, I also work so hard, but in the end, I only make $500. Right? So what happened? So what we are going to do is we are going to actually help Joy, okay, to help her to plan, okay, what she can do to make 2021 a better year for her. All right. So we're coming to discussion number 2. Okay, again, I just want you guys to be able to think out of the box and to be a little bit more creative. All right. So how can we actually help Joy increase her net profit for 2021? Okay, 2021. So what we are going to do is, once again, we are going to go to a breakout room for 5 minutes. Okay, but this time round, okay, I want, if let's say your name starts with the letter B, okay, I want you to initiate a conversation. Okay, so for those of you who are in the room, if you see anybody with the letter B, okay, on his name, starting with the letter B, okay, get them to initiate to lead the whole team. So once again, we are going to go to the breakout room and let's go.
Okay. Okay, machine, then online marketing, mass production, promote it online, and also reduce the fixed cost.
Okay, very, very interesting. Yeah, so thanks for the feedback coming from group one. Okay, the thing is, okay, let's start with the first one, machine. The thing is, does machine require you to put in more money or not? The answer is yes, right? And of course, if you go to online, you want to do some Facebook ads, Instagram ads, once again, you need to come up with more money first. And of course, to promote online is again, additional upfront cost. So the only one that you can actually do without coming up with more money is actually the last one, and that is reduce fixed cost. All right, reduce fixed cost, something for us to actually take note. Okay, thanks team one. And team two is actually Lucinda. Lucinda, give me a moment. Let me allow you to unmute yourself.
Oh, hi. Okay, Bowen, can you hear me?
Yes, I can.
Okay,
We can
so
hear you.
My team gave a suggestion to have free publicity, to get
free publicity. Maybe you can elaborate more on how do you get free publicity?
Actually, get some the media, those foodie, you know, you get those free cookies and then, you know, let them review. That's considered free publicity.
Sounds good.
Okay, and then we want to do same thing, social media, and then create an online order. So to create the cost, and they want to increase my team want to increase by $1 to $2 selling these cookies.
Okay, so you want to sell higher lah.
Also, there's a very good suggestion. Instead of selling one can or one bottle, we want to sell like twin packs or a bundle. Then we give a special price. So we sell more cookie.
Okay, sell more cookies. So let me ask you a very simple question. So if let's say in the market, right, everybody is selling you the same packaging, but people are selling at $9. You're already selling at $10. Do you think you will be able to increase another $2 more?
I believe, okay, I don't buy cookies outside. I buy good quality one, honestly, every year. So I'm willing to pay. So
okay.
Many Singaporeans are actually ordering cookies that has got better quality as well.
Yes, and how do you know whether is it a good quality or?
I eat before lah.
Okay, or is it based on review, based on your friend recommendation?
Someone gave it to me and I like it, so I will continue to buy every year. That means I will pay slightly more for the better quality cookies.
Okay, so what we hear over here is that you managed to try the cookie, and after you try, you know that it is good. So much so that even though in the market there might be other cookie that is even as good as what you have and cheaper, technically you will not know because you just like this cookie that you just buy every single year.
Unless I try, I mean effort to try other brands.
Unless you manage to try again. All right. So in this particular market, I would say that it is about letting the market know how good your cookie is. Because if you say, yeah, my cookie is the best cookie, that's what you say, ma. The other brand also can say they are the best cookie. They use the freshest butter, from organic cow, etc., etc. But the thing is, yeah, like I said, certain things you have to try it before you really will buy lah. Okay, thanks a lot. Yes, final one. Okay. No more already.
Yeah, thank you.
Okay, yeah, thanks a lot, Lucinda. Thanks for group 2 as well for the discussion. And for group 3, we have Sherry to share with us. Like, Sherry, help us to read out. Having sore throat. Okay lah. Incentive, I help you to read out. E-commerce to reduce operating cost, product differentiation from competitor to have price leaders for certain more exotic flavor. Paying the friend a percentage of the gross sales instead of a fixed 1,500, that will give them incentive to work harder and lower manpower costs and better marketing investment to boost the top line. So what I see over here is that to actually differentiate your product so that you can actually build a certain branding, okay, so that people don't really compete, people can't really compare apple to apple when you are something different. So they did it by exotic flavor. And of course, Team C are not exactly a very good boss because they pay by percent. Okay, so they want the friend to work harder. So if I sell more, you get paid more. Instead of a fixed salary of 1,500, that would reduce the cost coming from the company itself. And the last one is, again, have a better marketing investment to boost the top line. So once again, when it comes to marketing, you realize that you have to put in a lot of money. So some of you is like, invest in a new machine, etc. So all this is very much capital intensive. So that is why, okay, for the company that we are going to discuss today, you realize is that at the front couple of years, right, they actually have to spend a lot more. Reason being, like I said, in order for you to capture the market or to expand your business, okay, it is definitely not that easy. You need to spend a lot on marketing costs. You need to spend on R&D to come out with the best cookie. And of course, you need to find ways to reduce your expenses as well. All right. So coming back to my slide itself, let me go back to my slides. Okay. So today, this particular company that I'm going to start off with is this company called Tesla. Okay, so Tesla is a really, really interesting company. So let's look at the quarterly car sales of Tesla. You can see that, first of all, how do you know that Tesla is growing? You look at the number of cars that they sell. So on a quarter basis, can you see that it has increased significantly? Okay, yes, increased significantly, right? So I believe that last year, they actually sold about 500,000 cars. That is quite an impressive figure coming from Tesla, right? So that is one way we can look to see that they are actually growing. Another way, okay, is actually how are they able to increase the sales, right? Sometimes it's not just selling more cars, okay? You can also increase the profit by increasing the efficiency and also by reducing cost. I think some of you also discussed about reducing cost, reduce the manpower cost by turning them into a commission base, etc., etc. So that works as well, because end of the day, you want the company to have a higher profit. So this is what Tesla do to actually reduce the cost and to increase the efficiency. They have this thing called vertical integration. So what is vertical integration, or what does it mean? Basically is that, okay, they actually expand the business vertically. So for example, if you look at, like raw materials, so for Tesla, the raw materials is basically the battery. So instead of buying from other people, they actually manufacture their own battery. So that's what Tesla did. And of course, if you look at the assembly plant, okay, and the final assembly, the component, many of the parts, they actually build it in-house as well. So they have the Gigafactory, which you can see on the right-hand side, the second picture. That is where all the cars actually are assembled and built together. And last but not least, okay, for many of the other car brands, they actually outsource to, other sales, okay, to actually help them to sell it away, right? But for Tesla, it's totally different. They have 0 salesperson, okay, and they basically run their own retail stores. Okay, so that is something that is really different about Tesla. So maybe some of you might not realize, but for example, if you buy a Honda in Singapore, you can go to so many different distributors, right? Some of them, they say that they are the main distributor, etc. But for Tesla, if you want to buy a Tesla, it's direct. You are buying directly from Tesla itself. And pretty much, how do you buy a Tesla? You go to the website and buy. Okay, you go to their website and buy. So it's pretty similar to how you buy your iPhone and how you buy your, many of the stuff that you have. Okay, it's direct to the company itself. So that actually reduces a lot of the sales cost, okay, as well as some of the marketing cost itself. So this is what they did, okay, from the upstream to the downstream. And something really amazing about Tesla and why they are really a great company is that in terms of advertising spend, you can see that companies like GM, Ford, Toyota, Honda, BMW, most of these companies, they do have to spend quite a significant amount of marketing dollars so that more people get to know about, oh, this is the latest Honda Civic, this is the latest Ford car, etc. But in the case of Tesla, they actually spend 0 advertising dollars. Okay, they actually spend 0 advertising dollars. So can you just type in the group chat right now? So if they are spending 0, what do you think what is the method that they use to let people know that they have a new car that is coming up? I think this is worth a little bit of discussion over here. Yes, website. Okay, social media. Yeah, the boss is the influencer. What else? Elon Musk. Anything other than that? Okay, that doesn't mean that you have a celebrity CEO means that everybody will buy the car. All right, there must be something that they did. Okay, there must be something that they do in order for them to be able to reach out. or rather to be able to have a very strong branding and strong marketing. Celebrity bought their car, okay. Financial report, viral meme, full self-driving, Tesla day, Facebook, customer review. Any more? All right, so just think of it this way. If you look at, for example, we look at customer review. When you buy a Honda Civic, do they have review? Yes, they do have review. If you go to SG Carmart, yeah, pretty much every car brand have got a review. If you go to YouTube, yeah, there's a lot of review as well. Celebrity bought their car. Something to take note is that, like I said, Tesla spends $0 on advertising, which means that if a celebrity were to drive a Tesla, it is not being endorsed by Tesla. Basically, this celebrity just buy a Tesla and they don't mind giving a free advertisement, okay, for Tesla. All right. And of course, tweet. Yes, something that is very, very powerful. All right. So yes, I think a lot of you are partly true is that Tesla actually spend a lot of their focus on the social media itself, right? So one thing you realize is that before Tesla launch a car, they will always launch it on what we call, for example, the Tesla day, all right? So instead of just say that, hey, today we're going to launch this new Tesla Model S, okay? What they do is they actually build a lot of hype surrounding it. And of course, where does all the hype comes from? Actually, again, it comes from the social media. It comes from Facebook, it goes from Instagram, and they actually work with a lot of influencers. Okay, there are actually a lot of people that love to feature Tesla, this company. So what happened is that whenever Tesla has a new launch, they will invite all these YouTubers to go to the launch itself. And so when all these YouTubers go to the launch itself, naturally, they will actually put it onto their YouTube where millions and millions of people are watching their YouTube channel. And that is where a lot of other people will also get to know about the latest Tesla car that is out in the market. And you realize by now is that every time Tesla launch a new car, the news, everybody will be talking about it. Okay, and that is something that they are really, really good at to make the viral effect, I would say, all right, of the car itself. So again, not everybody is able to do it, okay, but Tesla managed to do it. So that is really, really amazing. So next company we want to look at is Apple. Okay, Apple, very, very interesting. So Apple, you realize that, okay, for Tesla, they have this thing called vertical integration. For Apple, it's a little bit different. It's what we call a horizontal integration, okay? Which means that, okay, within the same brand itself, they actually come up with different types of appliances that works under the same brand. So you can see that Apple actually started out with, your iPod as well as your MacBook. All right, then after that, they move on to things like the iPad, they move on to things like the iPhone. And now, of course, they actually bought over this earpiece company, the sound company, and they have this earbud, okay, earpod. And of course, right now they have the Apple's smartwatch as well. And of course, the whole thing is actually built upon this ecosystem that we call the iTunes, as well as everything is actually on iCloud. So that is something that they built on, okay? Everything is actually combined. So they actually expand their services horizontally instead of vertically. So when we talk about vertically, okay, you realize that Apple, they themselves, they don't manufacture the phone itself. Okay, so for example, Apple actually outsourced to Foxconn. They actually get a lot of items from TSM to create all the chip, right? So in terms of the supply chain, they don't really go for vertical integration, but instead they go for the horizontal way. So that is something that is a little bit different from Tesla, but it is something that is really, really powerful as well. So for companies that do horizontal integration, they also do a lot of acquisition. So as you can see over here, there are massive amount of acquisition that Apple has actually done. Of course, a lot of all these companies are pretty small company. Most of the time, they actually buy over them for the technology that they actually have, right? So yeah, that is actually how Apple becomes so powerful. So these are again things that we don't really know until you are really inside the company, right? So you can see that they are really very busy with a lot of acquisition. In fact, every couple of years, every year they have a couple of acquisition. That is not exactly that. I mean, they don't really announce it very loudly, but again, these are things to build their base so that they can actually dominate the market. So horizontal integration over here based on this particular definition, okay, increases the production of goods or services at the same part of the supply chain. Okay, sometimes via acquisition or merger. And this process can lead to a monopoly. Basically, what they are trying to do is they are trying to capture a larger market size. Okay, so they want to be able to capture everything. So as long as you're buying a laptop, you go to Apple. You're buying a earpiece, you go to Apple. You're buying a phone, you go to Apple. You're buying, you're doing a cloud, you go to Apple. You know, so whatever you do, you go to Apple. That's exactly what they want over here. So when they actually do this, what they're doing is they're able to gain market share. And what happens is that once they gain a monopoly in this particular segment, all right, they can actually command a higher premium as well. All right. So if you look at in terms of the numbers that we used to look at, so previously we looked at earnings per share, we look at operating cash flow, we look at ROE, and we look at debt to equity. But you realize that some of the things over here, we can't really use them, okay, especially for companies like Tesla, right? And as a result of that, we are actually going to look at 4 different criteria. So starting with the first one, okay, and that is revenue growth. So revenue growth basically means, you know, the number of, for example, if I sell cookie, one for Joy, okay, one bottle is $10 and she sold 500 bottles. So the revenue is basically $5,000. So if the following year she sold 1,000 boxes, so the revenue is going to be $10,000. So we want to make sure that the number of sales is actually increasing. Okay, so that doesn't mean that revenue growth doesn't mean that the company is making profit. Okay, this is something for us to think of. It just simply means that they are actually selling more items. And the next one is actually operate a positive free cash flow, and of course increasing gross margin. And last but not least, we are going to look at current ratio more than 1.5. So this will be the 4 new criteria that we will be looking out for. So I need you guys to actually take out a phone, okay, and take a photo of it, because you will need to remember this. This is very, 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 very important. All right, so these are the 4 criteria that we will be looking at. First of all, is the revenue growing? Is the positive? Is the free cash flow positive? Is the gross margin increasing? And is the current ratio more than 1.5? All right, so these are the 4 things that we will be looking out for. And yep, if this particular company fulfill all 4 criteria, it would have 4 stars, which is a good. Okay, and of course, if the company managed to fulfill 3 out of 4, that is also a good, is a pass as well. But if a company only fulfill 2 stars, it's going to be a fail. And of course, anything that is below 2 is definitely a no as well. So I know some of you in your mind, you'll be wondering, okay, so Bowen, what is the difference between operating cash flow and what exactly is free cash flow? And next question is, what is this thing called current ratio? So we are going to look at this one by one, starting with the first one. I'm going to use Joy as an example. Yep, so Joy is very, very busy today. So let's look at Joy itself. Okay, so for example, Joy sold, you know, $5,000 worth of cookie previously, based on our previous example. All right, and the ingredient that is going to cost Joy is actually $1,500, and the salary for her 2 friends is $3,000. So the net cash flow for Joy is actually $500. So basically $500 will go to Joy bank account. So that is operating cash flow. All right, so previously we mentioned that we want the cash flow to be positive. So in certain sense, cash flow, sometimes it can be the same as net profit, but in certain areas, there might be some money that is flowing here and there. So, you know, net cash flow doesn't necessarily equal to net profit, but in this case, it's the same. And what is the difference? So for example, okay, in this particular case, Joy decided to buy a new oven to make cookies, costing her $800. All right, so she made $500 from her, in terms of cash flow, she had $500. She spent $800 to buy an oven. So in terms of the net cash flow for her business year, you can see that it's actually negative $300. So what is the difference between operating cash flow and free cash flow? The biggest difference is that free cash flow includes capital spending. Okay, capital spending. So in terms of, for example, Tesla is building a new gigafactory. Okay, that is also part of capital spending. All right. So whenever you're expanding, or let's say you're in the F&B, you are actually buying more outlets, you are expanding your business. You know, these are all considered part of growing the business, and that is part of your capital that you're actually spending for your business itself. So end of the day, what we want is, like I said, in this particular case, when you have a negative free cash flow, not exactly the most healthy. All right. Yeah. So because for new companies, they do spend a fair bit of amount on capital. Okay. That means to grow the business. So we still want to make sure that this company, despite, spending money on the capital, we want the cash flow to still be positive. Okay. And that is why we are a little bit strict over here. We look at free cash flow to be positive. And next up, we look at current ratio. Okay, current ratio. So what exactly is current ratio? Basically, it's a little bit similar to debt, but in a way, we are looking at the company ability to actually pay off the short-term obligation or those due within 1 year. So we are looking at the short-term liquidity, whether does this company has got a short-term liquidity issue or not, right? So again, the formula is over here is current asset minus away the current liability. But what we are looking at just now, like I said, is to be above 1.5. That means your asset must be at least 50% above your liability. All right. The short-term asset must be 50% above the short-term liability. So right now, what we are going to do is we are going to go to the market. I'm going to show you some of the companies that we have actually mentioned over here. Starting with the first one, and that would be this company called Tesla. So first of all, I think what really got everybody interested into investing into all this company is that you can see, for example, Tesla, over the past 1 year, the share price has gone up easily about 6 to 7 times or even more. All right, depending on when you buy it. But yeah, this is a 600 to 800% ROI in terms of share price in 1 single year. So is it really a good company? Why is it that the share price is going up? Let's look at it from our new criteria. First of all, let's look at the revenue itself. So as you can see, revenue from the left to the right, you can see that it has been growing really, really healthily. So it means that they are selling more cars and the company is more efficient in that sense. So yes, this is definitely a pass. Next up, we look at the gross margin. Okay, gross margin, we want it to be above. Okay, we want, no, not above, we want it to be increasing. Okay, that means we want this to be a better figure. But in the case of this, you can see that the numbers are actually dropping. Okay, the numbers are actually dropping. So this is actually a fail for Tesla. And next up, if you look at the free cash flow, okay, over the last couple of years, okay, so this one you can focus on the last few years because this company, like I said, at the start, they are actually spending a fair bit on capital spending. Can you see the capital spending was pretty big? But what happened is that in 2019, even after minusing away the capital spending, they managed to generate a positive free cash flow. And that is something that is what we are looking out for. So for me, I'll focus on the last, in fact, 1 year. Just make sure that at least for now, the free cash flow is already positive. Of course, in the case of this, they have 2 years of track record, even better. Right, that is for Tesla. And next one, we have the current ratio. So current ratio, we just look at the latest figure, right? And that is 1.63. That is again a pass because we are looking at above 1.5. So in terms of Tesla, this is a 3-star company. So is it good or not good? Can you just type into the group chat? Sorry, the Zoom chat. Based on this criteria, good or not good? Okay, yeah. So at least you are still awake. That's great. Okay, coming to the next company. Okay, and this company is Pinterest. Just to do a quick check, how many of you are familiar with this company one? If you're familiar, just type in 111. If you have never heard of it, type in 000. 111 if you have heard of this company, 000 if you have never heard of this particular company. Right, this is a very interesting company. Later, I'm going to share a little bit more on, especially for the ladies. Okay, like Celine, you see, very excited already. Yeah, Celine do all the shopping from Pinterest one. Okay, great. So once again, you can see that this particular company, it is a newly IPO company last year. But you can see that from 2020 all the way until now, again, this company has gone up at least 300 to 400%. Okay, 300 to 400%. So once again, when we look at the numbers itself, okay, there's only record coming from 2007 onwards, but you can see that the revenue is growing, okay, about 4 times from 400 to 1006. That is pretty healthy. And if you look at the gross margin, can you see that the margin is actually increasing? Okay, the margin is increasing. That is again a plus for the gross margin. And if you look at the free cash flow itself, okay, free cash flow itself is once again, the last 2 years, it has turned positive. So once again, very good. Once a company is able to generate positive free cash flow, it means that, you know, in terms of the cash flow itself, it is pretty healthy. And you can also see it by looking at the current ratio. Okay, the current ratio for Pinterest is 11.51. Okay, which is, that means their current asset, the short-term asset is about 11 times more than the short-term liability. So yeah, this is a company that has pretty much a lot of cash and very, very low debt. So this is a 4-star company. Okay, 4-star company. If you like the figures coming from Pinterest, can you just type in 888 if you like the numbers so far? Let me show you the numbers. All right, so really, really interesting company. In fact, right, based on the latest quarter of Pinterest, if I never remember wrongly, just a few days ago, they just released the earnings per share for the quarters is positive. So this company has actually turned positive based on the latest quarter. But again, if you base on the full year, maybe it's still negative. But that is the trend. Okay, like I said, if you look at Tesla, once again is from a negative earnings per share to a positive earnings per share, and after that, the share price just go all the way up. All right. So I personally love to look at a company like this, whereby, you know, end of the day, it is not just about increasing revenue, etc., etc. End of the day, I still want a company that is able to make money. Okay, if you look at Amazon, you know, Amazon has been not profitable for many, many years. It's because they are constantly reinvesting back for capital to expand. You know, but end of the day, you know, Amazon turned profit, and what happened? The share price goes all the way to the moon. So if a company can keep growing and keep growing, but they can never ever make money, honestly, to me, this is a lousy company. Okay, so end of the day, okay, you still want to see that the company is on track to profitability. Okay, on track to profitability. That is really, really important. All right, so this is a 4-star company. And next up, we look at this company called CrowdStrike. Okay, CrowdStrike is in the cybersecurity space. So once again, you look at the share price itself, it has gone up quite a fair bit as well, easily 400 to 500%. So yeah, for those of you who are invested in the market in 2020, yeah, everything is going up. So very, very good year for the stock market. So CrowdStrike, once again, you can see that the numbers are increasing pretty significantly from 53 to 762. That is like more than 1,000%. Okay, more than 1,000%. And if you look at the gross margin itself, can you see that, okay, once they actually build up the reputation, build up the brand, etc., the gross margin actually went up. Okay, the gross margin actually went up. So again, this is something that is really, really healthy. Free cash flow is at positive as well. All right, positive free cash flow. And last but not least, if you look at the current ratio, it is at 1.91. So once again, this is a 4-star company. All right, really, really amazing numbers coming from CrowdStrike as well. And yes, so this is what I have for you, the 3 companies. But right now, it is your turn to do the work. So what we are going to do is I have 8 companies with me over here. All right, and what we are going to do is we are going to fill in the number itself. So what I'm going to do is, as what we have always done. Okay, let me just give me a moment while I go to this particular screen. Yes, so as usual, we will be looking out for 8 person to actually help us to fill in. So any kind volunteer willing to do the work so that you can actually learn better, you can type in me, and then I will help you to fill in this. Okay, thank you so much, May. So what we are going to do is we are going to go through this 8 company, okay, by filling it up, and then we are going to see if there's any good companies that is 3-star and 4 stars coming from this list over here. All right, so just keep it coming if you are able to. It's very, very blur. Okay, don't worry, I will help you to read out. The first company is Shopify, Alibaba, Square, Mercado Libre, Netflix, Fastly, Palantir, and Alteryx. Okay, Celine, it's square. Anyone else would like to help out? We just need about 5 more of you, 5 more. Let me just zoom in for you guys to see. Any more volunteer, any more volunteer. Like I said, when you actually do the work, you get to learn more. Okay, Patricia, thank you so much. Anyone else? Anyone else? Any more volunteer for the last 4 company? Netflix, Fastly, Palantir, and Alteryx. All right, Lucinda. 3 more, 3 more. Okay, so Lucinda, you are doing Netflix. And for Patricia, you are doing Mercado Libre, MELI. All right, we need 3 more volunteer. Today we have only 8 companies, so pretty straightforward. So yeah, can we have 3 more? We have 90 of you here, and we can't have 8 company. Can we have anybody with laptop? Just help us to do it. Okay, don't worry, I will guide you through if you're not too sure. Oh, funny, you are done already. That's fast. Okay, let Charlie do first. Charlie is Fastly. Okay, never mind, funny, we let other people do lah. Okay. You just need 2 more. Palantir and Alteryx. Very, very interesting company. 2 more volunteer. Okay, let's have 1 more. I'll do the last one so that y'all can follow me and see how we look at it. Left has just 1 more volunteer. Anyone more? Anyone? 1 more. I will do the last one, which is Alteryx. Come, let's do it. 1 more. Any volunteer? All you need to do is just type in me. All right, once you have the figure, can you just help me by typing it into the Zoom chat? All right, thank you so much, Stephen. Oh, you are awesome. Okay, so what I'm going to do right now is I'm going to go to Alteryx. I'm going to go through one time on how we look at it. So all you need to do is go to Alteryx and then you type in space Morningstar and then go in on the first tab to Morningstar. All right, for those of you who are joining us for the first time, okay, yeah, so now you can actually see how we actually extract all the figures. So once you come to Morningstar, go to key ratio and click on full key ratio data. So all you need to do is very simple, like what I've just done previously. Look at the number. You can see for Alteryx, based on revenue, is it growing? The answer is yes. So I'll just put it as a pass. And next up, we look at the gross margin. Is it increasing? The answer is yes as well. You can see, wow, very, very good. 90% gross margin. So that's again a pass. Free cash flow. Let's look at the free cash flow. Is it positive? Yes, you can see that it actually turned positive. So that is again a pass. And last but not least, current ratio under financial health. Okay, financial health, you can see it's 4.03 at the bottom, 4.03. So that is again a pass. And that's all you need. And basically you need the share price, 133.3. Okay, let's just put it down, 133.30. So overall decision, is it a 4-star? If it's a 4-star, it is good. We just put it as a green in color. All right, so I just put my name. All right, that's all you need. This is a 4-star company. Okay, let's wait for the rest to give us the number itself, and then we will be able to see, is there any other good company? Okay, pass. Current ratio 1.9, and that's a pass. Okay, wow. Stock price 240.38. and MELI, revenue, I believe is a pass. Free cash flow pass. Gross margin fail. Okay, gross margin fail. Current ratio pass. What about the free cash flow? Let me know if it's the wrong answer. Okay. Okay, let's wait for, we have how many? 1, 2, 3, 4, 5. 5 more. All right, so by the end of tonight's session, all of you are going to go away with 8 companies. Okay, 8 companies over here. So we have Fastly. Fastly is a pass. Then we have a fail and pass. So 3-star company from Fastly, and the share price is 113.15. So again, 3-star and 4-star, it is a pass. For Steven is doing Palantir, Palantir, Palantir. Alteryx, all pass. Yeah, I've already done it. Shopify, what about Shopify and Alibaba and Netflix? Netflix, pass. Okay, wow, very interesting. Pass, fail. This is again a 3-star. And what is the share price of Netflix? So we can see immediately from here, right? You know that, okay, Netflix is getting more and more customer. The user base is increasing. The margin is getting healthier and healthier. Okay, cash flow is okay, but quick ratio, that means the liability is relatively on the higher side. All right, so something for us to take note. But overall, I would say that 3 out of 4 is still okay. And we have 3 more company. Netflix. Let's take a look at Netflix share price. $550.79. Okay, yes. What about Shopify and Alibaba? Shopify and Alibaba from May and Palantir all pass. Okay, yeah, great. And what is the share price of Palantir? 34.05. 34.05. No worries. Yeah, so we have 2 more companies, Alibaba as well as Shopify. Okay, let me just go through together so that y'all can learn again. I think some of you might be looking at the screen. Yeah, so Shopify, Morningstar. Then click on key ratio followed by full key ratio data. Right, wow, so you can see this, wow, this is amazing. 24 all the way to now is about 100 times, 10,000% in terms of growth coming from Shopify. And you can see that the gross margin, is it increasing? Nope, it's actually, I would say it's decreasing. So it's a pass, fail. Free cash flow, it is positive. So pass, fail, pass. And last but not least, 17, which is a pass. So for Shopify, it's a pass, fail, pass, pass. So the gross margin is a fail. So this is a 3-star company. And we have Alibaba. Mercado margin is positive, but turning lower. If it's turning lower, is that issue over huge increase in cash flow? Not necessarily. Okay, when it comes to margin, right? One thing we have to take note is that, for example, if you look at Shopify itself, as a company grow, what happened is that, okay, by default, their gross margin should increase as the branding increase, as they become more efficient. Okay, but there are also many saying is that as a company grow so fast, the gross margin will drop. Again, we are just trying to be really, really strict and conservative, and that is why I want a full pass. That means I want a gross margin to be increasing as well. But in the case of previously, when we look at what was the company again, I think it was Alteryx, okay, whereby the gross margin is like 90%. And you know that 90% is already like a very, very high number. There's no way a company will have 100% gross margin, right? So if a company has, to me, in my personal opinion, anything that's above 70%, all right, to me, that is already a very, very amazing gross margin. I will just put it as a pass, all right? Anything that's above 70% for now. But again, like I said, it really depends on how much you understand about the business itself. So yeah, there's some reading to it, but of course, for the numbers itself, we just try to make it simple so that anybody will be able to determine. Okay, Baba passed 3. What is the 3? What is the 3 that Baba passed? Which one? PE can't see. PE can't see, but we are not looking at PE. Yeah. Why is the screen so blur? Stop share. Let me stop share and share screen again. Is it still blur? Okay. I think I have to zoom in really, really big. Okay, yeah, should be able to see the numbers right now. So let's look at Alibaba. Let's look at Alibaba. You can see that it probably take you about 5 to 10 minutes to look at one company. In fact, maybe 3 minutes. So it's really, really a very, very quick scan through. Okay, Alibaba. So first of all, let's look at the revenue. Is it increasing? The answer is definitely yes. All right, gross margin. You can see that it's dropping. Okay, gross margin is dropping. So I will just put it as a fail. Free cash flow. This company has always been very, very healthy with the cash flow. So it's very, very good. And of course, financial health is 1.67. Yep, so it's 3 pass except for the margin itself. Okay, so pass, fail. So this is 3 star. And the Alibaba share price is 265.67. 265.67. Let me just check Shopify. What's the share price? 128. 1287.75. 1287.75. And the last one is Mercado Libre. MELI. Mercado Libre. Okay. Yeah, so this company, it is actually an e-commerce company, but they focus mainly on the South Africa side. So 1918.13. 1918.13. Okay, wow. So pretty much today you can see that based on this criteria itself, these are all pretty solid company. Again, like I said, why is it that all of them are pretty good? It's because I choose one. Okay. So okay, let's do something simple. Let's do something simple. Can you just give me a company that is pretty famous? And let's take a look at the number itself. Coming from you guys. Give me a company that is growing one. Okay, Snow. Okay, let's take a look. Snow Morningstar. Okay, all the company that you give is still the relatively quite decent company. I need a not so decent company. Okay, yes. So Snow, once again, you can see that the numbers are pretty limited. But again, you can see that based on the figure that we have, the 3-year revenue is growing. Gross margin is increasing as well. Free cash flow is still negative. I think because it has not turned positive yet. So this is a fail from the free cash flow. And for the last one, which is liquidity, its current ratio is 9. So yes, this is again a 3-star company. What is lacking here is basically the free cash flow to be positive. All right, this is coming from Snowflake. And Nikola. Okay, let's take a look at Nikola. Okay, Nikola. Yeah, because I know that Snowflake is a pretty decent company. to start with lah. Okay, but let's start with a really not so good company and you difference. Okay, you will be able to see the difference. All right, so this is Nikola. Nikola is so-called a competitor of Tesla, but they are doing hydrogen truck. But so far they have not yet sold a single truck yet. So the current sales is 0. Okay, well, I don't think the Morningstar doesn't even want to show me the key ratio. Okay. Okay, let's wait. Just give me a moment. Okay, we can't see it. Somehow there's an issue with Nikola. Let me see. NNDM. What company is that? Very familiar. Nano Dimension. Okay, let's take a look. So this is in the printer. Nano Dimension. Okay, wow, this is a very small company. You can see 1 million, 5 million, 7 million, 3 million. So just by looking at this, can you let me know? First one, revenue, pass or fail? Revenue, is it a pass or fail? Can you see the screen for this company, Nano Dimension? Revenue is a fail, right? And what about the gross margin? You can see that it went up and then it started to went down again. Blur. Wow, how come? What is happening? Not sure why. Okay. Yeah, so it's again a fail. Free cash flow is all negative. So free cash flow, once again, it is a fail. So far we have 3 fail. It has been blurred from the beginning. Yeah. So apologize for that. Okay, let me just read out the answer. So ROE is, no. The current ratio is again 8.1. So the only one that's passed is the current ratio. So this is a 1-star company. So for me, when it comes to 1-star, I will definitely avoid for now. Okay, I will avoid for now. So I think just now there was a very good question coming from, let me see. There is a very good question about valuation. Let me see, is it? Yes, from Kit. Kit is asking, do we do valuation in the same way we do standard company? What do you guys think? What do you guys think? Okay, so while you guys type in the answer, okay, let me answer the question for Jackie. Okay, so now the question I asked you guys is, do you think valuation matters in this kind of company? Okay, do we really use like PE, PEG, price to book, dividend, yield, etc., etc.? Yeah. So let me answer the question on Jackie answer first. What is the purpose of analyzing the current ratio? The current ratio, the formula is the current asset divided by the current liquid liability. So it's basically to know that, based on the debt that they have and the asset that they have, are they able to actually pay back? Okay, so it's actually looking at a very short-term liquidity issue. So anything that's above 1.5, it means that the asset is 50% more than liability, at least for the short term. So still okay. Anything below 1.5, dangerous. Okay, anything below 1.5 is dangerous. So instead of looking at debt to equity, because a company can has a lot of debt, but if they have no issue serving the liquidity, then again it might not be exactly a bad thing. Especially right now, interest rate is so low. Company might be, again, get more debt to expand the company. It makes sense for me. I pay 2% interest, but I can make 100% in a year. All right. So again, what we want to focus more on the liquidity, and that is why that also tie in with the free cash flow. If a company has got positive free cash flow, then that would actually help a lot when it comes to liquidity. If a company has got negative free cash flow, means that they are literally burning money. Okay, literally burning money on a year-to-year basis. That is really unhealthy. All right. So yeah, just to answer the question on valuation, in my personal opinion, when it comes to this kind of companies that is very high growth, you can use PEG. Okay, you can use PEG. But once again, this matrix doesn't really work as well. Reason being is because PEG, okay, has the PE over there. So if a company is still negative, that means if the company is still not making money, but you can already see the revenue is growing, gross margin is growing, free cash flow is positive. But if the company is not making money yet, there's no PE to start with. So remember, PE always must be working on a profitable company. So that is why for me, for a company like this that is not yet profitable, but you can see based on the metrics that they really, really have strong potential, I will only do it based on the trend itself. So I will base on the checklist, at least a 3-star or 4-star, and then I will look at the chart itself. So I'll focus on the chart to really help me to determine when to jump in and also when to get out of the market. So this kind of company, like I said, you can't really use a valuation, a fundamental investing approach or a value investing approach, because everybody will tell you different answer. Everybody will tell you that, oh, I think that this company will have PE 100. Another company say that I think Netflix should be PE 200. You know. Yeah. So the checklist that I gave you is for new growth company like this. In short, is for company that is growing but not yet turned profitable. Then you can use this particular metrics to see whether they got potential. Like I said, not every growing company will be like this. There will be company that is growing, but the cash flow, everything is really, really bad. All right. So something for you guys to actually take note. Of course, if you want to be conservative, you can see that out of so many companies that I gave you, some of them is 3-star, some of them is 4-star. If you want to be safer, go for the 4-star. Go for the one that has the maximum number of stars. That would actually give you even more confidence. So 3-star, you can also just put it one side. Unless you got a lot of money, you can just buy all of them. Okay. So right now I'm going back to my slide. I have about 2 more slides to share with you before we end off today's session. So just give me a moment. Just give me a moment. Finishing soon already. Just to do a quick announcement before I let you all go. Okay, yeah, so this is one announcement that I just want to make. Okay, and that is, okay, for some of you, you are wondering about options and how do we take advantage of options to skyrocket our return in 2021. I have this webinar that is coming up. All right, I think the earliest is after Chinese New Year, so don't worry, you still can enjoy a Chinese New Year. Okay, we're going to do this webinar. Okay, it's called a 10x options secret webinar. So all you need to do if you want to sign up is just go to the link bit.ly/10x with Bowen. This is a free event. You can actually just sign up and we will be sharing with you more on options side and how you can actually grow your portfolio in 2021 using this particular strategy. All right, this is the first announcement that I want to make. The second announcement is that previously we have actually shared inside the Telegram itself that we have this new series, and it is the UI Goes Deep series. Starting in Feb 2021, is going to be launched really, really soon. This series is actually headed by one of our coaches, Regina. So what we have over here is I have a short snippets of what is going on inside this particular series of UI Goes Deep. Remember earlier on when I actually talked about the how itself, analyzing this kind of company, right? Like I said, the numbers can only give you about 50%, but the other 50%, you really have to go into the water before you can really determine how solid this ship is actually, how stable it is. So that is the whole idea of UI Goes Deep, whereby we actually read up on the company itself, we go in depth and we actually share with you what we feel about that particular company, right? So it ties in together very closely with what we have shared with you today. So I'm going to share with you a short snippet. So sit back, relax, and enjoy.
In the upcoming UI Goes Deep series, we will be talking about a company that is in Ultimate Investing's radar. To keep some suspense, this company will be known as Company A in this mini video called Did You Know? There are 5 things I would like to share about Company A, which operates in the cloud space. Number 1. Did you know that the cloud space is big? And I mean really big. Just look at this. Curious to know where Company A fits in? I'm not telling you now. I'll review when we dive in together. Number 2. Did you know that the cloud infrastructure spending is to surpass 80 billion and global cloud computing market is estimated to reach 623 billion by 2023? Company A rode on that wave and is a 5 times leader in virtual client computing. And can it continue to lead? Number 3. Did you know that one computer-related company has an 81% stake in Company A? And what does this mean for Company A's future? Number 4. Did you know that for every minute of unplanned data center downtime costs $7,900 per minute? And Company A is helping their customers achieve near zero downtime. Last, number 5. Did you know that as of 2012, 20 million virtual machines run on Company A's technology? If they were physical machines, it is 2 times the length of the Great Wall of China. That was 8 years ago. What do you think about now? So, what is Company A? I'm still not going to tell you. Stay tuned for the UI Goes Deep video coming to you soon.
Okay, yeah, and
In
just to do a quick check, how many of you here are excited, okay, to know what is Company A? If you're excited, can you just type in excited? Wow, when I saw this video, I was like, wow, can you tell me what is Company A? I want to know how I want to invest in this company already. All right, but okay, like I said, this is a very, very interesting new series that we are coming up, and what we're going to do is we are going to officially launch it next week. So I'm not going to tell you exactly which day we're going to release. So all you need to do is just stay active onto the Telegram channel, and we will actually release the video. So this is a recorded series. So the video is already recorded, and basically we will actually release the video next week inside the Telegram channel. So do watch out for it, and of course do support our new series by helping us to watch, and of course if you think it's good, help us to share with more people as well. All right, and with that, I come to the end of my sharing tonight, and I'm going to take on some questions. If you have any questions, you can stay on. If you have no question, okay, I just want to wish everybody Happy New Year, 恭喜发财, and what for 2021. All right. And of course, for the UI team, we are going to take a short break. So yeah, over the next few days, if we are less active, please pardon us, because we also want to enjoy Chinese New Year. I'm gonna go collect more ang pao. So anybody want to do ang pao, want to give me ang pao, I accept e-payment. You can pay now to me. Yes, please enjoy. Yeah, nowadays it's all e-ang pao, so don't need to see me, never mind. You can, as long as I give you the QR code, you can scan and you can you can give me your blessing. Okay, thanks everyone, and Happy New Year. How about black box? Black box on leave. Black box no leave one. Black box work 24/7. Yeah, thanks everyone, and good. What is PE ratio? Which is PE ratio? Yep, so for Alex, if you want to know more about PE ratio, go and watch the video that we have previously, Fundamental Investing 2.0. It should be inside our Facebook group, Facebook page. Yep, Happy New Year. Happy New Year, everyone. Let me just play some music.
y'all feel like that? Oh yeah. All right, check this out. And it goes a little something like this. This bitch is my recital. I think it's very vital. True rock, alright, that's right. On time, it's tricky, is the title. This bitch is my recital. I think it's very vital. True rock, alright, that's right. On time, it's tricky, is the title. Here we go. It's tricky, true rock.